everyone, thanks for making time for this month's Livestock Market Report. I'm Colter Brown from the Northern Ag Network. Well, the month of May is certainly exciting in the cattle market. New records continue to be set. From a price perspective, things are as good as they've ever looked. But we've got challenges too. A lot of areas could use more moisture and costs are a concern. So we need these prices to hold on just as long as they can. Today we're going to talk about where we're at in the cattle cycle. We'll look at beef demand, the weather outlook, talk about the record set in the futures and cash markets, and have an update on imports of cattle from Mexico. First though, a message from the sponsor of our report, the Marsh McLennan Agency. Livestock risk protection and pasture, rangeland, and forage insurance are essential for managing risk in today's unpredictable markets. Weather fluctuations and tariff impacts make these markets challenging to navigate. Call Tori Johnson at the Marsh McLennan Agency at 406-209-2341 for customized strategies to help you confidently prepare for the future. Well, the month of May started with cattle futures already at record highs. The question was if we were going to be able to get to that $300 mark in the feeder futures or if that would prove to be just too much of a ceiling. But thanks to strong beef demand and the cash-fed cattle market, we got there early in the month, hitting 301. And it looked like that was going to be the top. Then USDA closed the border to Mexico from live animal imports and the market shot higher again, found the all-time high at 306. It could move higher still, but right now we love these strong markets. As we think about the situation with Mexico, the U.S. first closed that border back in November due to the threat of New World screwworm. The border was reopened in February with some new protocols in place to mitigate it from getting into the U.S. However, with Mexico having a slow response to screwworms and putting unnecessary inspections and fees on aircraft that are dropping sterile flies to mitigate the risk, the screwworm threat continued to move north, so USDA closed the border again. They'll examine the situation on a month-to-month basis, but until at least the end of June, we're not going to have any Mexican cattle getting into the U.S., and that just further reduces the available supply of cattle to the market. So back to the futures, after hitting that all-time high, the market did kind of bounce around, it back off and then rally back. There's a lot of volatility right now. We saw a huge drop-off with the threat or a report that screwworms had been found in the U.S. That was of course confirmed to not be accurate, but just underscores the amount of volatility. For the month here, live cattle ran up $3 to $5 in the futures and feeders up 1 to 3. Much like the futures, the cash set new records over the last month. Now, packers had been buying a lot of cattle for deferred delivery, which created this idea that they may not be as active in the cash market, but that really hasn't seemed to slow anything down yet. We ended May with live sales ranging $225 to $230 for the most part, dress deals $360 to $365. Of course, feedlots continue to hold the leverage in this market, and they're commanding a larger share of the beef dollar. Packers responding to that by trying to exert leverage over the retail sector to improve their margins. On the cash-fed cattle side here, I would guess that we're going to peak in price here over the next couple of weeks before moving lower in the heat of the summer, but really, downside risk on fed cattle just seems pretty limited right now. Of course, grilling season is in full swing at this point, and beef demand has been nothing short of impressive, continuing to work higher with the highest wholesale values going back to the pandemic. We've got the choice cutout north of $360. Of course, retail beef prices, you guessed it, new records as well. So a lot of demand out there. We could see some pushback from consumers at these high price levels, but at this point, it does look like demand is going to be a limiting factor for cattle prices, at least in the near future. So that's the demand side of the equation. Of course, the supply side is favorable to cattle prices, especially fed cattle supplies continuing to tighten. This month's Cattle on Feed report didn't offer any real surprises. Placements into feedlots down 3% from a year ago to the smallest monthly number since April of 2020, of course, when they were disrupted by the pandemic. Marketings were down 3% this month. Total on feed numbers down 1.5%, and I'd expect those to keep coming down, especially since the next report will reflect no cattle coming from Mexico. So where's the industry at in the cattle cycle? When are we going to grow this cow herd? CattleFax CEO Randy Block told the U.S. Meat Export Federation that their numbers are saying January 1 of this year is going to end up being the cycle low, and they're forecasting a gradual rebuild of the cow herd. We haven't seen substantial amounts of heifer retention yet, but time will tell on that, especially in the second half of the year. Of course, non-fed slaughter moving lower, suggesting that we're not culling as many cows right now. One thing Block did say is that this price rally may be more demand driven because per capita beef supplies have held steady, so it's not just the reduced supply of cattle. As we look back to the last cycle, we peaked with an annual average on fed cattle at $1.54. A year later, we saw those feeders at $2.52. Now this year to date, we've got fed cattle averaging $2.07, 5.5 weight steer calves near $3.60. If you adjust those numbers for inflation, we've already beat the cycle highs from the previous cycle. Now, whether the projection that the low in beef cow numbers has already been reached, well, that's going to depend heavily on the weather this year. I don't have to tell you, a lot of areas could use more moisture. If you compare back to where we were this time last year, drought conditions are definitely worse and honestly didn't improve as much as we hoped for in May. The NOAA Drought Outlook is saying that conditions probably aren't going to improve a lot from here. The forecast has drought continuing or developing across most of Montana, the Dakotas, eastern Wyoming, and into Nebraska. That will limit herd expansion regionally, and if it gets much further south into other major beef cow states, that could result in the national herd shrinking again. So as I think of those drought conditions, we have to be concerned about what hay is going to cost. USDA says that nationally hay stocks are up 15% from a year ago. That's a bit misleading though, because in our region, most of the hay supplies have gone down. So you think of reduced hay supplies and drought conditions, hay is probably going to cost more this year. So there certainly are headwinds and areas of concern, but from a price perspective, this market as strong as it's ever been. Looking around some of our local auction markets, of course not a lot of feeders selling this time of year, but the ones that have continue to be at or near record highs. At Torrington Livestock, we saw 7-weight steers $331 to $351, 6-weight heifers $329 to $339. At Payson Billings, upper 5-weight steers $392 to $406, the light 6-weights $360 to $383. Of course, the big question is, what are these calves going to be worth in the fall? Now that's hard to answer right now, but we can kind of glean some information from Northern Livestock Video's timed online auctions. You can see some of the results with 525-pound steers coming in late October at $412, 540-pounders at $392, and some 6 1/4 weight wean steers coming in December selling for $348. There's the schedule for the video sales that are going to be coming up soon. We've got Live Ag Video with their sale on June 12th. Superior Livestock with a Corn Belt Classic June 17th to the 19th. The Early Summer Special from Northern Livestock Video on June 19th. And Cattle Country Video on July 1st with the High Plains Showcase. The cow-calf pair market very busy through May. We pretty well are nearly at the end of that marketing time frame. I think more pairs hit the market this year just with the drought conditions, but they did meet pretty good demand. At the public auction yards, we saw those young pairs 39 1/4 to 44.50. Middle-aged pairs in Torrington 3,300 to 38 1/4. 5 to 7-year-olds at Montana Livestock topped out at 43.50, and short-term pairs in Belle Fourche 2,700 to 3,050. Now looking at the slaughter cow market, we're seeing support there from strong lean 90s trim values and the fact that beef cow slaughter year to date is down 17%. Now going forward, we're likely to peak soon and probably hold steady through much of the summer before, of course, seeing values move lower in the fall. Most of the cull cows right now being caught from 140 to 160, bulls very strong as well from 170 to 190. And wrapping up here with the lamb market, did see some renewed strength with support from ethnic demand. 3,000 head of sheep at the public auction yards with 60-pounders $250 to $275, 70-pounders up to $280, and the 80-pound new crop lambs $256 to $265. A mix of old and new crop lambs there at the Newell sheep yards. Still good demand for slaughter ewes. They're bringing 79 to 106. Well, thanks so much for joining us for this month's report. Look forward to bringing you the report on the video sales here in just a month. From the Northern Ag Network, I'm Colter Brown. Have a good one.